Welcome to this Talk Tickers briefing. One of the biggest shifts in retail investing isn't about what people are buying, but how they're buying it. I'm talking about fractional shares, and today we're diving deep into how this one simple idea has completely shaken up the market. This quote right here, it perfectly captures the promise, right? The dream of fractional shares, opening up the market for everyone. But is that the whole story? Today, we're going to look past the hype and get into the real-world impact. So here's our game plan. We'll break down what this revolution is all about, rewind a bit to see how we got here, and then look at the ripple effect it's had on the entire market. After that, we'll run through a quick guide for investors and then peek into the future. Okay, let's dive right in. When we say fractional share, what are we actually talking about? Let's get a really clear definition. Honestly, the easiest way to think about it is like buying a slice of pizza instead of the whole pie. You don't need the cash for the entire thing. You can just decide you want, say, $20 worth, or $10, or even just $5. It makes even the most expensive stocks on the planet accessible to pretty much anyone. And this slide right here really hammers home the difference. Before, high share prices were like a giant wall keeping a lot of people out. Now, that wall's basically gone. The entire question for an investor has changed from how many shares can I possibly afford to how much do I want to invest in this company. It's a total game changer. But this didn't just happen overnight. If you look at the timeline, it's actually pretty wild to see just how fast this went from a kind of niche idea to the industry standard. Before 2019, this was mostly something you'd only see in dividend reinvestment plans. But then look at the end of 2019. Boom! Interactive Brokers makes a move. And then a month later, Robinhood jumps in. That was the real tipping point. The big guys, Fidelity and Schwab, they had no choice but to follow. And fast. In less than 2 years, the entire retail investing world was transformed. So what actually happens when you suddenly let millions of new, smaller investors pile into stocks that used to be out of reach? Well, the data tells a pretty fascinating story. 148.1%. Just let that sink in. That's the absolutely massive increase that researchers found in these tiny, tiny trades happening for high-priced stocks, mostly away from the big exchanges. It's the clearest signal you could ask for that a whole new wave of retail investors had entered the chat. And this chart, wow, it really paints the picture. The solid line, that's the stock's price. The dotted line, that's the volume of all those tiny trades we were just talking about. Just look at how a sudden spike in those small, fractional buys lines up with a short move in the stock's price. It shows that all these small investors, when they act together, can create some very real price pressure. So the big takeaway here is pretty clear. This isn't just about giving more people access. It's created entirely new market dynamics. Fractional shares definitely democratized investing, but they also introduced a whole new kind of volatility to blue-chip stocks. And yeah, they can absolutely help fuel those meme stock frenzies we've all watched unfold. Okay, so if you're an investor yourself, what do you really need to know? It is absolutely crucial to understand both sides of this coin. The pros are pretty obvious, and they're powerful, right? Accessibility, easy diversification. But you've got to pay attention to the cons. A big one is you often don't get voting rights. And this idea of vendor lock-in, that's a huge deal. It means you usually can't transfer that little slice of a share to another brokerage. It's stuck where you bought it. Plus, selling might not always be as quick as selling a full share. So where does all this go from here? Well, let's take a look at how the financial system itself is starting to adapt to this new reality. Now, this might look like a really boring regulatory update, but it's actually a huge signal. FINRA forcing firms to report fractions down to 6 decimal places means one thing: fractional shares are here to stay. This is the system formalizing the practice, making it official, and adding a layer of transparency that just wasn't there before. And all of this brings us to this central debate, the big question. Are fractional shares really creating a new generation of savvy long-term investors? Or are they more like financial entertainment? A gamified experience that feels like you're building wealth, but maybe without the true benefits of real ownership? The answer is probably somewhere in the middle. And it's the question that's going to define the next chapter of retail investing. Thanks for joining this analysis. And just a reminder, this is not financial advice.